Step back and see the macro and digest it down to the micro. Trading, investing, and geopolitics from macro down to the micro. Welcome to Macronomics.
Welcome back, guys, to Macronomics. So we just wanted to hop on here real quick and just share a quick little insight that we gathered from today. So this will be quick. This is a quick little episode, insight, some experience. So yesterday, and excuse the background noise, I'm at Dunkin' Donuts doing some working on some websites. Here, let me step right here in the back. These damn vehicles don't got no damn sense. Alright, so boom, guys. Yesterday, right? Sunday we got into a trade. Remember we was talking about the emotional aspect of trading? There was something about the setup of this trade that we just could not deny. It was Aussie USD and the New Zealand dollar and the US dollar, right? So this trade setup was there, and I'm like, damn, this is looking amazing. Just the setup on the weekly, the candle that had formed, right? So we decided, you know what, this is a good setup. It's a great risk reward. We went ahead and put our chips in. And long story short, the trade was very profitable. It actually went into our direction. And here's what we learned from it. So the biggest thing is, first off, being patient. And also on Sunday, when not just hopping into these trades. I got into two trades, actually. It was USD and the Mexican peso and Aussie USD, New Zealand dollar, and the US dollar. Now, the reason why I count the New Zealand and the New Zealand and the Aussie dollar as the same is because they trade the same. If you look at the chart pattern, they essentially trade similarly. Probably because their economies are closely related. I don't know, but they trade very closely like each other. So I placed those three, but technically two trades. So boom. The lesson is, if you see the setup, take it, guys. Like, there was an emotional part. Like I feel like it was a subconscious pull. Now here's where you got to be careful. Yes, listen to your intuition or whatnot, but do not get swayed by your emotions. So being able to listen to your emotions and identify logically how this will pan out, your risk to reward, and if it's worth it. Not just, going listen to your emotions and jumping into the trade without any other types of confluence. Based on the macro, the dollar index, some other pieces of information I was able to identify, this is a good trade. So I decided to take it. So this is another huge part to the trade we learned. So yesterday, we actually just exited the trade earlier this afternoon. We was in the trade for about 2.5 days. And yesterday we was up about, maybe about 60 pips. We was up about 60 pips, and we wanted to close the trade. Just see, emotionally, we felt that pull. Like, damn, the money's in front of us. We can just take this trade. We can get it now. I was feeling it, right? But that's not trading to trade well. We're not trading to make money. We got to remember this. Yes, we're trading to make money, but what is the first thing that we're doing? We're trading to trade well. And if you exit a trade based on just purely what you see, you're not trading well. You have to trade based on your structure and what you're putting out there. So here's what I decided to do, guys. I decided to employ a tactic of essentially moving my stop loss. So I moved my stop loss further down so that we would still be profitable even if the instrument reversed, which it did earlier this afternoon, and I'm okay with. Overall, we took home about excuse me. We took home about $100, $50 total, so that's about 100 pips because we had a 0.5, and so we took home 100, and that's okay. We're completely okay with this trade. Here's why: because even with that, I think it probably could have went down total. I think would have been like 160 more that we could have got. And the reason why it's okay is because yesterday when we moved our stop loss, we was able to move it down further this morning. So if we would have exited the trade yesterday, it would have been $30. We was able to get $20 more because instead of us exiting the trade when we seen the money yesterday, we just placed the trade on market structure. So we went down to about the 4 hour, between the 4 hour and the 1 hour. We identified some support and the structure as a whole on that time frame, and we moved our stop loss in alignment. And we actually survived a reversal, and then it went down further. We survived the reversal and went down further. But then here's where it got crazy, is that it actually earlier today it reversed a lot harder. Now guys, look, you got to take the money while it's off you. This is just my approach, how I go. You got to take the money while it's there. If you want to get back in the trade and you believe that it still has the momentum to go down and you're convicted, here, listen, like we talked about the other day with investing, take that money now, right? And then get back in. That's just that's personally what I'm doing. I'm going to check back in on the instruments later, but overall, guys, I had to just tune in and share that with you guys because it's a lot of lessons in that. It's a lot of lessons in that, and I feel like if you got to be patient. You got to be patient. You got to move that stop loss and work with it. So I'm headed back out to the traffic, guys. I'm not gonna, be out here too long, but I just had to hop on here so we can, turn that macro into a micro and digest it a little bit. So with that, guys, continue to keep putting it together, and I'll see you in the next one.